Right, morning guys and girls. So today I'm gonna look at a very high level chart of specifically Bitcoin and just some real high level way of trading, or we can probably call it swing trading, because most of us we got a real job or daytime job and we don't have the time to scalp or to day trade during the day. So I'm working really hard to get to that, to actually scalp and day trade, but lately it's been going quite well in the business, so I have to keep pushing that. Okay, so that aside, let's just start here. So I want to start with pivots. If you talk about pivots, I've spoken about that before, and that's normally where you take your Fibonacci points or levels from. So if you look down here, that was we call it the Corona low, and then that's definitely a pivot. And then if you were playing around locally, you would probably have set, let me zoom in here so then it becomes much clearer. So you can see there's pivots, there's a pivot if you want to, there's a pivot and there's a pivot and there. So if we didn't see the rest of the chart and we were going up here, that would be our pivot. Beg your pardon. And then if this would have just carried on up straight, then this level here would have been a pivot. But then we see the chart gives us a really clear pivot because it comes back down, and then that level there is a start for the Fibonacci. So we will use that. Obviously that is a clear pivot, so I just want to show you something here. And then obviously, I mean, it's a long time that elapsed, from where our low started to where the top is put in. But say there was a lot of FOMO and everybody bought Bitcoin, and it was on everybody's mind, and then you rock up on the scene and you decide, okay, I want to buy some Bitcoin, and then you run into me and I tell you to just relax and wait for the right time. And in the meantime, why don't you start teaching yourself some tools? And this is all free. It's free education. I am really delighted to share the knowledge that I've learned the hard way with someone, and to make it easier for someone else to trade and make some money on the side. With it doesn't just relate to Bitcoin. If you've got these technical skills, you'll be able to trade basically any market. And these levels, I think from now on, I'll just call this the CC, because I belong to a group that's called the Chart Champions, and most of my late knowledge, I've received from them, and they've got a very good trader there, Daniel, and I have to give credit to them for teaching me all these things. So for short, I'm going to stop calling this the Golden Pocket, and I'm going to call this the CC. It's just for Chart Champions, just made this famous. So one of the most important levels of the Fibonacci, or for us the most important, is the 618. That's the popular one, and then the Chart Champion started using the 0.66, because you'll see Bitcoin regularly overshoots that level. Let's just pull this a bit further and you'll see, look at that, it goes closer, it touches the 6.6 and gets closer to the 6.6 there. Right, so maybe on the way up you started learning about it and you listened and you didn't just FOMO in, and then you got to the top. I didn't prepare this, I just want to see this Fibonacci there, pull down there, yeah, and then you managed to watch a few videos of Lofty, and then you saw that happening there. You see a high and it builds up, and then there's a bit of a weaker one there, and then you think, yeah, maybe it's a good time to short, because you've heard of shorting as well. And let's just pull a Fibonacci there from the top to the bottom. You see it came down and it retraced into that CC again, that little week there, and when it lost the week, that was the area to short. Not up there, because who knows, Bitcoin was going to drop down. It could have just continued up, but patience, you wait for it. So let me just delete that one. You'll see there it goes into, and you see now it's lost that level. It's coming down really hard, and then you pull another Fibonacci to get your sniper entry, and you pull it down there, because you see now it's looking like it's going up again. But when it goes back up again and it rejects from that level, the minute it gets below that CC level, that's where you enter your trade. So much safer trades. We never short the top and we never long the bottom, but we use these tools to give us safer entries. So let's just put a little short in there, and your stop loss would have been above there. So that's just, you just give yourself some room. So you don't get in hard, so you only use money that you're prepared to lose. So when you short, you're probably going to have to use a bit of leverage just to make some. Going long, you don't need leverage, but going short, but only say like 2x leverage on that. So you must know that you must accept that you're prepared to lose then 30% of your position. So you don't put all your money, never put all your money into one trade, because there could be one madman on the other side of the world, and which just completely how can I say, throws your trade or your trade idea upside down, invalidates your trade. So there's our first trade. So you've got a little bit of your money in there, nothing that will hurt if you lose it, and you're going down. So first thing that you do is you check for levels. So obviously we're going to put in we're on the daily here, so I've taught you before, but I'll just show you again. So you got to put your levels in. You use your magnet and you do it on the candle closer. So there will be a daily level there, and I've just got them marked out as shortcuts on my chart here, and then I know that's an important level. And on the way down here, you would have something wrong with my chart. It's probably my signal. Just reloading again. Yeah. And then on this side, while we were going up, you will always keep your levels updated. So there was a daily level there. We came down, you see how it respected there, touched, tried, and then it went back up again. Then on that side, let me just put it on that side, you would probably have had, well, not probably, you will definitely have this as a daily close here. So then, long story short, I'm not going to put in weekly and monthly and all that. That also seems like an important level. You can see there, and that's exactly the point, the 382 level. So, but anyway, so the daily, when it crosses that, you can see when it came down, it went through, it tried, it went down. That week went up again, retested. You can see these levels are always respected. So that would have been my first take profit, definitely. So you say we jumped in with $1,000, and that's at 2x leverage, so that would have been roughly 30% profit. Then you close 30% of your trade there, and once you hit your take profit, you move your stop loss to your entry, and then this is a guaranteed winning trade. There's no more risk. But now you've got 60% running, but now you start looking for next levels, and when you pull your Fibonacci, you see, okay, the 382. So if it's a strong market upwards, then really strong, then it normally bounces off the 382. So guaranteed you will definitely take profit. Your second take profit will be but a front runner just above the 382 there. So 22 times 3 is 66%, man. And in a span of how many days is that? 1, 2, 3, 4 days, maximum 4 days. That's really good profit. And then the other third you can leave open. So what I would normally do is, when you have a Fibonacci there and you have the CC, what we call here, I would close near another 20%, yeah, just front run it again around there, and just leave 10% for if we go far down. But you must always be aggressive with your profit taking. So there times 2, 88%, man. That's really good profits there. So don't give me the credit that I make it sound so easy, because I sometimes also get so involved in the charts and in the I zoom in too closely into lower time frames that I miss these big moves. Okay, so there is an example for you, another example that I wanted to show you. Okay, so now we're at the bottom here. So you're zooming out again, so you are in that short trade. So now you've got another account. You don't keep all your money in one account, you split it over 2 or 3 accounts. Now you see we've gone up and we're moving down, so you put you had your short hat on there, and now you put your long hat on, and you think maybe the market reacts here, so I want to be in and you sort of hedge your short. I beg your pardon. And now you look at this and you see the CCs here, and you decide, no, I want to place an order here. And you can say, I will never do it right there, because that's best case scenario. So it comes down here, Say you decided it came down here and you see a huge reaction there. Let's just zoom in again to get a bit closer. You see a huge reaction there, and you take your Fibonacci, you put it up there, and you see there's the CC. I would have gotten in there. I would have been wrong, because there's some guy on the other side of the world that wanted to push because he saw there was some more liquidity lying around there. But that's what I would do, and I would take profit quickly or get stopped out. But let's just see where we are. No, I wouldn't have gotten stopped out. Let's move that up there. So I would have gotten in there at the top there. My stop loss, stop loss has to be below the CC, and then you see your stop loss is around here, and then I would say no, I'm not prepared. If I put leverage, say 2 times leverage, I wouldn't have been prepared for that, so I wouldn't have taken that trade. Yeah, that's the bottom line. And then you wait, you move your long or your trade order out, and you wait, and it goes up and it goes down. So you're actually waiting for it to get a bit lower because you weren't prepared to trade there, and then it goes down and it goes down even further. So now I didn't prepare this, I just wanted to look at the volume here. Yeah, there's the answer. You see this long week that came down, there was high volume there. Then we push down again in this week. It is a green week, but the bottom part pushed down, and you can see where that volume is there, much less. So that translates into this. See there, and there's high volume, there's high volume, there's high volume, and there's only these 2 weeks, two volumes here, but they're much lower than that one there. And that's a clue for you, because there's big volume pushing the market down, and then it comes down, and then this is a swing failure of that level. So there was some liquidity there. A lot of people got in there too long. They said, no, this is it, we hit the important Fibonacci level, we're going up. And then the big players, they say, wait, we just want those retailers because there's liquidity there. So they bring it down, the stop losses are there, they pick up all that money in the market, and then they push it up. So once you see that on lower volume, so that would have been my entry, but not exactly there, because it could have just dropped right through. So once again, then we get in close, move that, you take your Fibonacci, sorry man, that magnet is on. So I'm looking at that level and that level there, so it pulls down. So you'll see the 61866 or the CC level, and then another important level is the 786, and another one is the 886. So let me just click on my Fibonacci level so that you can see that. So you can just pause the screen and record that, or put it into your, or change your Fibonacci level. So those are the most important ones. You need those 3 levels: 382, 618, 786, and sorry, the 886 and the 66. That's it. Yeah, 5 levels. So that would have been my entry there. So let's pull it there. So that's my entry there. Let's zoom out a bit and check the. So basically, if your entry is there, your invalidation is so. Well, your entry is there, your invalidation is just below this week. So that makes it a much safer trade. So if you go into it, when you're long, you can actually go straight. You can just spot trade, because then your money grows with the asset. And look at that beautiful trade up there. So 120%. Does it say how many days? It doesn't say how many days. Let's just take it from there, from that retest there. Up there, 137 days. That's beautiful. That's 4 months. I'm sure anybody will agree that if you make 120% in 4 months, that's great profit and a good investment. Okay, and then I'm just gonna I can just hide this one, and then getting to the top there again. So now the first thing that you do, okay, now let me just show that long again, so you don't get into a euphoria state. So when it's moving up, you got to take profits on the way up. So obviously you want to, when the market is moving up, you want to cross those levels. That was important level, and looking across to there. So there will be definitely would have been my first take profit over there. 32% if you're on ×2, or even straight spot trade, that's really good, 30% profit. Then I would have looked at these daily levels. See, there it was respected, there it was respected again. So definitely there I would have front run it a little bit, or maybe even that now on top there. So that daily level would have moved to there, because that it was now tapped. It ran through it, so that's your fresh daily level. And I would have slightly front run it there, so perfect take profit. See how it reacted off there, tried again, got rejected really hard, and moved straight back. And then on a second attempt, I mean probably 3 weeks later, it only crossed there. So a really good take profit there on, well, that's close to 68%. Okay, and then so it's quite important to not we shouldn't FOMO in when the market is running up. We should wait, but also when it retracts, we shouldn't be scared. So you took profit there, and that's when you moved your stop loss to your entry. So even if it goes down, you've taken profit, so it is already profitable. You've made money, and but you've got to trust the system. And look at these levels here. That's quite an important support resistance level. There it was tested, there it was tested again. Look, there it took a nice bounce off there. So just for interest sake, let's see what that level was. No, that's the wrong tool. Probably the 3. Yeah, it's just no man's land. It doesn't matter though, that was a very good strong support resistance level around there. 40,000 is always the round numbers are always a psychological level. Anyway, so that level, we took it up to the top, so I'm gonna hide or just delete that, not important anymore. And then another, sorry, I'm falling around here. I just wanted to show that trade, still show that trade. So you're running up to the top there. So once you get to previous all-time highs, that's always a take profit. So I would have taken massive profit there. Well, at least another 30%, and maybe leave 30% open. Probably more. I would have probably taken 50% there and only leave 20% open, because the chances are so good that you just swing failure that and come down. Once again, swing failure, a lot of people got in there, got into shorts there, and then that big trader on the other side of the world just pushed a little bit higher to take all those people out and just make them a little bit despondent and reluctant to short again, and then they went big down there. So let's just see that. So once again, the volume, you can see the volume was really hard there, pushing up to coming down there, and then the market pushed up again, but with less volume. You see there was a higher volume and there was a little bit less volume. That's your first sign, and that one was even less. That's your second sign. But now let's go a bit deeper. So you'll see this, the daily from the previous high was tested there, just week through, tested there, front run, week through, tested, go through, retest. A lot of people went long there because they thought this is it, we're going higher, and then that was the rejection. So let's just zoom in again and we get our trusted Fibonacci levels. Take a Fibonacci from there to there and say, oh, front run. So we missed that trade. So if you want to be strict with the Fibonacci's, but you could have looked at the volume and said the volume is dropping, that must be a good trade, and especially when we lost the daily here. So then we waited and we waited, and a few days went by, and we were quite sad because we had lost these levels. And then you pull the Fibonacci down from there to there, and then once again it happens. So you can see that test of the daily, push through, test, a longer wick, pull down. That's a bearish sign. Then you must know you must get in, and it's slightly front run the CC. So I wouldn't have jumped into the trade there, but when we lost the daily, that was definitely the entry. Then let's check again. So I would have checked there again, pull the Fibonacci there, go down again, and if it retested or rejected off the 0.382, then you know it's a strong bearish market. So that's a sign to go short. And there you could have taken a short right down to where we are now. Let me just look. Yeah, I just went into the 4 hour here because I missed an opportunity up here again. Okay, so once we lost that, the all-time high, or that range at the top there, You also have to look at these ranges or in levels. So you had that level there and you had that level there, so that was a range there, and then we formed a little range here. And normally if you form those ranges, then you always take your Fibonacci. So that was a range here. So I got that line a little bit low, but those highs of that little range there, you'll take your Fibonacci from there. No man. Take your Fibonacci from there to these lows here, and you'll see how perfectly that was rejected off that Fibonacci. You could have actually waited a little longer and maybe got into there, make sure that you see a market structure change, and then jumped in. So that was even a bigger or longer short. There was your Fibonacci, so that was my entry. And then it's really easy because your invalidation is just above those highs there, because if we go higher than those highs, then we've got a market structure change, then we're putting in higher highs. Okay, so that was your position there, and then we zoom out a bit. And then once again, now as you're moving down here, that previous high would have been a take profit. So I'm on, that was 9%, so say we're on 2x leverage, so you've got an 18% profit there. And then there's always daily levels, but this would have been a significant level here as well, because it's the 40,000, and we remember from previously that was a very significant level. So going down there, that was 30%, and if it's on 2x, that was a 60% profit. So I probably would have taken decent profit there. Maybe leave 20% open for if we really go and look for new lows. These lows, I would have definitely left a 20% open to check for these lows. So you maybe in summary, what I wanted to show. So now when you've got this long-term short going on, you actually are hedging the Bitcoin you're holding, because you're only growing your Bitcoin if you're going up, but now you hedging yourself. So when we're going down, you're trying to keep your dollar value of your Bitcoin the same. And now this really saves us psychologically, because now you're not panicking when everybody's crying, oh, Bitcoin's going to zero, Bitcoin's going to zero. You don't really care, because the closer it gets to zero, your last trade is still open, and you're making bank. So I hope this all making some sort of sense to someone. I just want to explain what I mean by market structure change. So I'll just look at this one at the top here, trying to find something easy to, let's do this. So when you're in a trending market upwards, then you're making a higher high. See there, we just crossed that one, so we're making a higher high and a higher low, because that low is higher than this one. Higher high, higher low, higher high, higher low, higher high, higher low, and so it goes on. That's the market structure. It goes higher high, higher low. Just it's still, we were still in a bullish market. Then we made a lower high, so we could have still just from here just gone back up again, so it wouldn't have really mattered. But then we made a lower low than there, or sorry, you don't check that one, you check the last low that while you were still going up. So that was definitely a market structure change there. And then this was confirmed with this low, but then they confused the market a bit, because it made a higher high, but then when it rejected there, that was and then this I was actually wrong on these last two, because there you formed a range. So there you're in a trending market, you're in a ranging market. And then the same there, we put in a higher high, so that was still a bullish market structure, because we were higher than that, and we made a higher low. So there are a lot of people longed here. Let's see there. I don't know, but a lot of people definitely longed here, and there was big liquidations, because then the market turned. So that was a lower high, but not sure yet, because it could have just turned here and gone up. So we're not sure yet, but this low confirms it, because it's lower than the previous highest low. So that's a lower low, and then a lower high, lower low, lower high, lower low. The market structure changed. So once you get below that level there and you see it comes down and it retests that, that's also a really good entry if you swing trade on no leverage or on very low leverage. So I'm just going to draw it here again. So you've got say this is your important level there. So the market is going up, it does that, it goes above, comes down, maybe does something like that, retest that, and it comes down. There's your entry there. So that was our entry there. Phew, that's a long video today. Maybe I just want to show you my fixed range pulls. No, I will keep that for tomorrow, otherwise this video gets too long. So tomorrow I'll just explain how I use these tools. So the Fibonacci I showed today, tomorrow I will do fixed range pulls. Alright, keep your eyes on the charts and I'll see you tomorrow. Cheers.